One of the biggest mistakes people make when they enter the crypto market is that they try to complicate things. They'll have 25 different tokens sitting in their wallet, constantly chasing the next pump, constantly trying to outsmart the market. But if you look at people who have actually built wealth in crypto, not just made a lucky trade here or there, but built lasting portfolios, you'll notice something different. They focused. They picked a few winners, accumulated them consistently, and had the patience to ride through the noise. And that's exactly what I want to break down here with these three assets: Hedera HBAR, Stellar XLM, and Ripple XRP. You've probably seen people online tossing around numbers like, you need 10,000 of this, or 1,000,000 of that. But here I'm keeping it grounded. The strategy I'm talking about is simple: 5,000 HBAR, 5,000 XLM, and 2,500 XRP. That's it. 3 allocations that can position you very strategically for the next cycle. Now let's talk about why these numbers matter. Because they aren't just random. They're based on real data, tokenomics, and market psychology. Let's start with XRP, because it's the easiest to understand. Right now, if you look at the XRP rich list, which tracks wallet balances and ranks holders, you'll see that having around 2,437 XRP puts you in the top 10% of all XRP holders. Think about that for a second. Just 2,500 XRP, and you're in the top 10%. That's a pretty powerful position. Now, at current prices, 2,500 XRP costs about $7,500. For many investors, that's not an outrageous entry point. We're not talking about millions of dollars, we're not talking about life savings here. We're talking about an amount that, if you believe in XRP's future utility in global remittances, cross-border payments, and financial infrastructure, could make a lot of sense to tuck away for the next few years. Here's the kicker: XRP's supply is much larger than BARs or XLMs. It's sitting at around 100 billion total supply, compared to BAR's 50 billion and XLM's 50 billion. So when you think about equivalent positioning, you actually need fewer XRP than you do HBAR or XLM to hold a similar stake in the network. That's why the benchmark is 2,500 XRP versus 5,000 for the others. Why 5,000 HBAR and 5,000 XLM? So, if XRP's top 10% line is 2,500, why am I suggesting 5,000 HBAR and 5,000 XLM? Simple, because of relative supply and price action. HBAR and XLM both have a total supply around 50 billion. If you wanted to hold a network equivalent stake similar to being in the XRP top 10%, you'd want roughly double the XRP figure, so 5,000. That way, you're positioned in a comparable percentile of holders across all 3 ecosystems. Think about it like this: you're building parallel positions. You're not just betting on one horse in this race, you're spreading across 3 projects that all tackle different, but complementary, parts of the blockchain and payments world. HBAR, enterprise-grade DLT, insanely fast, very low fees, governed by a council of global corporations like Google, IBM, Dell, and LG. XLM, peer-to-peer value transfer, payments, stablecoin rails, banking the unbanked, global remittances. XRP, institutional adoption, RippleNet, central bank partnerships, cross-border settlements, and tokenization of real-world assets. These are 3 infrastructure plays, not meme coins, not hype tokens. They're literally building the plumbing for the digital economy. One of the biggest rookie mistakes in crypto is ignoring supply. People will look at price and say, oh, XRP is $3, HBAR is 25 cents, XLM is 40 cents, so XRP must be the most valuable. But that's not how it works. Price alone tells you nothing without supply. Take XRP. At $3 with 100 billion total supply, that's a $300 billion market cap if all tokens were circulating. Compare that with HBAR at 25 cents. With a 50 billion supply, a $1 HBAR would already mean a $50 billion market cap. And a $10 HBAR? That's $500 billion. So the ceiling for each token depends heavily on supply, demand, and use cases. By targeting 5,000 HBAR and 5,000 XLM, you're locking in a position that's meaningful relative to their supply without overextending yourself. You're not trying to buy 1,000,000 tokens, you're just trying to be in that upper tier of holders. And here's where psychology kicks in. Being in the top 10% of holders doesn't just mean bragging rights. It means that when mass adoption comes, you're not scrambling to buy in at higher levels. You're already positioned. You've already secured your slice of the network before the majority even realizes what's happening. What 5,000 actually means in dollar terms. Now, let's put this into actual dollar amounts so you can see the scale. At today's prices, HBAR at 25 cents, 5,000 HBAR costs about $1,250. XLM at 40 cents, 5,000 XLM costs about $2,000. XRP at $3, 2,500 XRP costs about $7,500. So in total, you're looking at around $10,750 to build this portfolio. For some people, that's a lot of money. For others, it's manageable. But here's the beauty. You don't have to buy it all at once. You can dollar cost average. You can accumulate slowly, adding every month, every paycheck, every dip. Because the goal isn't to time the market perfectly, it's to build the position before the explosion happens. Historical context. Why these numbers could work. Let's put this in perspective with some history. Back in 2017, if you had bought 10,000 XRP at fractions of a cent, you would have been set for life when it ran up to $3 plus. If you had 5,000 XLM when it was trading for pennies, you would have seen six-figure profits. The same with HBAR in its early days. People who accumulated big bags at 2 to 4 cents are already sitting on massive returns. So why 5,000? Why 2,500? Because they are reachable targets. They're psychologically digestible. They're not so large that they feel impossible for the average investor, but they're also not so small that they're meaningless. They strike a balance. And when we hit the next euphoric cycle, which we will, you'll be glad you positioned yourself with these benchmarks. Distribution of holders. Why percentiles matter. Let's talk about something most people ignore. Distribution of holders. In every crypto, there's a whale class, a mid-tier class, and a retail class. The whales always dominate, holding millions of tokens. The retail crowd usually scrambles with hundreds. The sweet spot is the mid-tier class, the top 10% to 20% of holders. That's where influence meets opportunity. You're not small enough to be irrelevant, but you're not so large that you can't sleep at night worrying about market swings. Holding 5,000 HBAR, 5,000 XLM, and 2,500 XRP puts you squarely in that middle class of holders who stand to benefit most when mainstream adoption kicks in. Why focus on 3 instead of 10 or 20? Another important question. Why not spread into 10 or 20 different projects? Why focus on just these 3? The answer is conviction. In crypto, diversification is important, but over-diversification kills returns. If you're holding 20 tokens, chances are you don't even understand half of them. You're just throwing darts. But if you pick 3 tokens with clear use cases, institutional adoption, enterprise governance, and real-world traction, then you can focus. You can study them. You can follow their updates, track their ecosystems, and actually understand what you own. These 3 HBAR, XLM, XRP cover the digital payments, enterprise blockchain, and financial infrastructure trifecta. They're like owning different sectors of the same booming industry. And with just 3, you can actually manage your conviction without spreading yourself too thin. Alright, now that we've set the foundation with why you need 5,000 HBAR, 5,000 XLM, and 2,500 XRP, let's talk about the part everyone secretly cares about most. The money. Because at the end of the day, no matter how much we like the technology, no matter how much we admire the teams or the mission statements, the reality is we're here for financial opportunity. We want to know, if I hold these allocations, what kind of profit multipliers am I realistically looking at? And here's the thing, crypto is the only market in the world where 100x returns aren't just a fantasy. They've actually happened. They've happened multiple times across multiple assets in multiple cycles. So when we talk about a 2x, a 5x, a 10x, a 50x, or even a 100x, we're not just throwing out lottery numbers. We're talking about actual scenarios that have played out in previous cycles and could play out again. Starting with reality, the current portfolio value. Let's ground this in prices. HBAR, 25 cents. 5,000 HBAR costs $1,250. XLM, 40 cents. 5,000 XLM costs $2,000. XRP, $3. 2,500 XRP costs $7,500. So, if you put them together, your initial investment is $10,750. Not small, but not outrageous either. For many people, this is the cost of a used car, a vacation, or a few months' worth of expenses. But instead of disappearing into consumables, this is capital you're planting into 3 digital assets with massive potential upside. Scenario 1, the conservative 2x. Let's start small. What happens if the entire portfolio just doubles? 5,000 HBAR, $2,500. 5,000 XLM, $4,000. 2,500 XRP, $15,000. Total equals $21,500. That's a neat $10,750 profit. For some people, that's a year's salary. And here's the thing. A 2x in crypto is often considered a failure. People joke that only doubling your money is boring in this market. But think about it. Where else in the world can you realistically double your capital in a matter of months or a few years? Not stocks, not bonds, not real estate. In crypto, a 2x is just the entry-level win. Scenario 2, the reasonable 5x. Now let's push to a 5x. What does that look like? 5,000 HBAR, $6,250. 5,000 XLM, $10,000. 2,500 XRP, $37,500. Total equals $53,750. At this point, your initial $10,750 has ballooned into over $50,000. That's the down payment on a house. That's a luxury car, fully paid off. That's debt wiped out, student loans cleared, a fresh start financially. And the crazy thing? A 5x in crypto is not even considered aggressive. Assets like HBAR and XLM have done 10x, 20x moves in single cycles before. XRP went from fractions of a cent to $3 in 2017. A 5x is literally the baseline expectation for these kinds of infrastructure tokens when the cycle heats up. Scenario 3, the life-changing 10x. Now here's where things get spicy. What if we hit a 10x? 5,000 HBAR, $12,500. 5,000 XLM, $20,000. 2,500 XRP, $75,000. Total equals $107,500. This is where people's lives start to change. That's 6 figures from a 5-figure investment. And here's the key. 6 figures is the threshold where money starts buying freedom. At $20,000, you can cover bills. At $50,000, you can buy luxuries. But at $100,000, you're talking about freedom options, travel, investments in other businesses, the ability to take risks. And remember, we're not talking about speculative meme coins here. We're talking about projects with enterprise adoption, global remittance corridors, central bank partnerships, and corporate governance. If anyone is going to 10x reliably, it's these infrastructure plays. Scenario 4, the dream 50x. Okay, now let's jump to the extreme. 50x. People roll their eyes when you say it, but history shows it's possible. 5,000 HBAR, $62,500. 5,000 XLM, $100,000. 2,500 XRP, $375,000. Total equals $537,500. $500,000 from a $10,000 starting point. That's generational wealth territory. That's quit your job territory. That's the kind of money that changes not just your lifestyle, but your family's trajectory. Now, let's be fair. Not every token will 50x in a single cycle. But think about it. HBAR, XLM, and XRP are all still far below their all-time highs in terms of adoption curve. If this next cycle is as euphoric as the last two, one of these 3 could absolutely hit a multiplier like this. And because you're spread across all 3, you don't need all of them to do it. You just need one. Scenario 5, the moonshot 100x. Finally, let's talk about the moonshot, the 100x. People think it's a fantasy. But remember, XRP itself pulled off a 1,000x in its early days. XLM pulled off similar feats. HBAR, though younger, has already done massive multiples off its lows. 5,000 HBR, $125,000. 5,000 XLM, $200,000. 2,500 XRP, $750,000. Total equals $1,075,000. That's 7 figures. From $10,000. And here's the wild part. In crypto, this has happened before multiple times. The question is not, is it possible? But is it possible again? And the answer is, with the right projects in the right cycle, absolutely. Why multipliers happen, the psychology of exponential moves. Now let's get into the psychology of why these multipliers actually happen. Because to an outsider, a 10x, 50x, or 100x sounds insane. In the stock market, a 100% gain in a year is considered phenomenal. But crypto operates on different rules. Here's why. Low base effect. Many of these assets are still small in market cap terms compared to traditional finance. It's easier to 100x from $1 billion than from $1 trillion. HBAR and XLM are still under $20 billion. That's tiny compared to the markets they're tackling. Narrative shifts. Every cycle has a narrative. 2017 was ICOs. 2021 was DeFi and NFTs. 2025 is shaping up to be enterprise adoption, tokenized assets, and institutional integration. Guess what? XRP, XLM, and HBAR are perfectly aligned with that. Liquidity waves. When institutional money comes in, it doesn't trickle. It floods. Just look at Bitcoin ETFs, billions in weeks. The same thing will happen when funds and banks start scooping up utility tokens for real-world use cases. Retail FOMO, let's be honest. Nothing drives prices like FOMO. When people see XRP moving, they pile in. When XLM mirrors XRP, they chase it. When HBAR starts hitting headlines for enterprise adoption, the crowd follows. This compounding effect drives exponential moves. The patience factor, why holding matters. Now, here's the most important part. These scenarios don't play out overnight. They take time. They take patience. And they take conviction. Think about Bitcoin. How many people sold their coins at $100, thinking they'd made it? How many dumped at $1,000, thinking they'd timed the top? The ones who held through all the noise, all the crashes, all the FUD. They're the ones sitting on generational wealth today. It will be the same with HBAR, XLM, and XRP. If you panic sell at a 2x, you'll miss the 10x. If you take profits at a 5x, you'll never see the 50x. The real wealth in crypto doesn't go to the traders flipping for pennies. It goes to the holders who lock in their positions and let time do the heavy lifting. Another thing I want to stress. You need to define what enough means for you. For some, doubling their money is life-changing. For others, nothing less than $1 million will feel satisfying. But here's the danger. If you don't define enough, you'll always feel behind. You'll always chase. So before you even start building your 5,000/5, 000/2, 500 portfolio, ask yourself, what's my target? Is it $50,000? $100,000? $500,000? $1 million? Once you know that, you can align your expectations and avoid self-sabotage. So when you hear people talking about 5,000 HBAR, 5,000 XLM, 2,500 XRP, it's not just about flexing numbers. It's about mapping out real profit scenarios. It's about showing you that with a reasonable allocation, you're not just chasing memes, you're positioning yourself for multipliers that could transform your life. From a conservative 2x to a life-changing 100x, the math shows the path. The only question is whether you have the conviction to walk it. At this point, we've broken down the numbers, walked through the profit scenarios, analyzed the market narrative, and looked at how ecosystem growth is setting the stage for something massive. The takeaway is simple. 5,000 Hedera, 5,000 Stellar, and 2,500 XRP isn't just some random shopping list of coins. It's a strategy. It's about positioning yourself where the institutional money is flowing, where utility is real, and where narratives are aligning with technicals. Crypto isn't about guessing anymore, it's about recognizing patterns, both in human behavior and market cycles. XRP has already proven it can weather storms, XLM has shown it will ride closely alongside, and HBAR is quietly building the infrastructure that enterprises and governments actually want to use. Together, they create a portfolio foundation that blends growth potential with staying power. But here's the thing, time is the key variable. These plays aren't about flipping overnight. They're about buying patience, conviction, and resilience in a market that rewards those who can see beyond short-term noise. By 2025 and beyond, when momentum peaks and headlines scream about new all-time highs, you won't want to be the person saying, "I wish I had accumulated earlier." So here's my challenge to you. Don't just watch from the sidelines. Get involved. Start small if you need to, but start somewhere. If you can secure your 5,000 HBAR, 5,000 XLM, and 2,500 XRP now, hold through the noise, and let the next cycle do its work. You'll thank yourself later. And don't do it alone. Engage with the communities. Follow projects like Orbit on Hedera. Stay updated with partnerships and ecosystem launches. The more plugged in you are, the more conviction you'll have when the market inevitably tests your patience. This is about building wealth with foresight, not luck. It's about being intentional with your crypto strategy. Whether you're a beginner or an experienced investor, the opportunity is here, the roadmap is clear, and the timing couldn't be better. 5,000 HBAR, 5,000 XLM, 2,500 XRP. That's not just a portfolio allocation. That's your ticket to participating in the next great shift in digital finance. So what are you going to do? Wait until prices have already 10x'd and everyone's talking about how they knew it all along? Or are you going to position yourself now, when conviction pays the highest dividends? The choice is yours. If you're ready, take action. Accumulate smartly. Hodl with patience. Plug into the community. And most importantly, remember, crypto doesn't reward those who wait for certainty. It rewards those who can see the story before it becomes obvious. The story of Hedera, Stellar, and Ripple is still being written. Make sure you're not just reading it later, you're living it now.